Hello everyone. Welcome to my Workbook Solutions videos for managerial accounting. This video covers Chapter 18, Process Costing. Please note that if you are watching this video at a much later date than it was posted, the chapter number may have changed as well as the page number of each example in your workbook. Overall, that shouldn't matter, as the example problems we'll work through will still help explain the material. I'll also show the question in its entirety within the presentation, so you won't actually need a physical copy of the workbook, though having one will make the process much easier for you. Without further ado, let us proceed. Turn to page 5 to look at the Malbum Company example. The Malbum Company uses a process costing system. Materials are added at the beginning of the process, but conversion costs are incurred evenly throughout the manufacturing process. On July 1st, there are 400 units in beginning inventory that are 100% complete as to materials. With regard to labor and overhead, however, the units in beginning inventory as of July 1st are only 75% complete. During July, 10,000 units were started in production. Of these, 7,000 were completed and transferred to the next department. On July 31st, the remaining 3,000 units were 20% complete with regard to labor and overhead. Required. Using the FIFO method, calculate the equivalent units of direct materials and direct labor and factory overhead, otherwise known as our conversion costs. After doing so, let's recalculate the above items using the weighted average method. As instructed, let's tackle the FIFO method first. We always begin process costing problems by filling out our formula for units to be assigned costs. Beginning inventory plus units started and completed equals units transferred out. Add to that last amount ending inventory to get units to be assigned costs. Beginning inventory is 400 units. Next, we have 10,000 units started for the period, of which 7,000 were completed and transferred out. In other words, 7,000 units were started and completed. We now know our units transferred out to be 7,400 units. Add to that our 3,000 units ending inventory to get our units to be assigned costs, 10,400 units. As a partial check on your work, notice how our units started and completed and ending inventory reconcile to our units started in production. Recall that these numbers we just determined are in whole units. Our next step is to convert them into equivalent units. Because direct materials and conversion costs are entered into production at different rates, we need to calculate their equivalent units separately from one another. We'll do so by multiplying whole units by the percent of materials or conversion costs added during the period. Let's start with direct materials. What percent of direct materials were added to beginning inventory during this period? 0%, right? The question states that materials are added at the beginning of the process, so beginning inventory received all of its materials last month. None will be added this month. What percent of materials were added to units started and completed? 100%. Again, because as soon as we started these units, they received 100% of the materials. Also, the fact that they were completed this month means that they received all of their materials for this stage of production. Sum those two numbers together to get total equivalent units transferred out, 7,000 units. What about the ending inventory that was 20% complete with respect to conversion costs? Also 100%. Again, once these units were put into production, they received all of their necessary materials. The total equivalent units to be assigned costs with respect to direct materials is therefore 10,000 units. Next, we'll do conversion costs. Conversion costs are incurred evenly throughout the process, and beginning inventory was 75% complete with respect to labor and overhead. So what percent of those costs were added this month? 25%. If beginning inventory was 75% complete as of the start of the month, then we had to add the remaining 25% of conversion costs this month. What percent of conversion costs were added to units started and completed? 100%. Because these units were completed, they must have received all of their necessary conversion costs for this stage of production. Total equivalent units transferred out are 7,100 units. Finally, ending inventory is 20% completed with regards to conversion costs. So what percent of those costs were added this period? 20%. Ending inventory is 20% completed, and we started working on this inventory this period. So that 20% is what we added this month. Total equivalent units to be assigned conversion costs is thus 7,700 units. Now we'll repeat the same process, but using the average cost method. The calculation of our units to be assigned costs is identical to the FIFO method. Where we see our first deviation under the average cost method is that we don't need to calculate equivalent units for beginning inventory or units started and completed. We can start by calculating the equivalent units for units transferred out, which will be 100% for both materials and conversion costs. If the units were transferred to the next department, then they must have received all of their necessary materials, labor, and overhead from this department. For ending inventory, 100% of materials have been added for the same reason under the FIFO method. All materials are added as soon as the inventory is put into production. Conversion costs are still incurred evenly throughout production, and ending inventory was only 20% complete with respect to labor and overhead. So 20% is the percent added for conversion costs this month. Our total units to be assigned costs for materials and conversion costs are 10,400 and 8,000 units respectively. For our next problem, turn to page 6 to look at the following information for Dawnbreaker Coffee's roasting department. We have our beginning inventory, 1,200 pounds, 30% completed with its dollar value, $5,970. Your next two lines break out your beginning inventory into how much of it is direct materials and how much of it is conversion costs. Beneath those two items, you'll see how much direct materials were added during the month, as well as how much conversion costs were incurred. We need to figure out the dollar value of ending work in process for August and units of inventory transferred out. Keep in mind that all materials are placed in process at the start of production, but conversion costs are incurred evenly throughout production. Using the previous information, let's build a cost of production report. At this point, you should be able to calculate the equivalent units as demonstrated in our last example. Maybe pause the video and try to do that much on your own, then watch the rest of the solution. Once you have your equivalent units, we'll determine the dollar values for those items and record our journal entries for direct materials put into production, direct labor put into production, overhead applied to work in process, and units transferred to finished goods. Once we have our journal entries, we'll use them to update the work in process ledger account for the roasting department. If you turn to page 7, you'll see a table that you can use to build your cost of production report. Always remember that we begin process costing problems by calculating our inventory to be assigned costs in whole units. Please refer to the problem information in the bottom half of the screen as we determine these amounts. We can identify our beginning inventory and ending inventory units without any difficulty. All we have left are our materials added and our units finished. How can we use these amounts to determine the rest of our whole units? The total goods that we finished during the month are the goods that we transferred out. Now we can use our basic math to calculate units started and completed and units to be assigned costs. Note how our units started and completed plus our ending inventory equals our units put into production for the period. We'll first calculate our equivalent units for direct materials. Our beginning work in process was 30% completed, but all materials are added at the beginning of production. This month's beginning inventory was started last month, so it received all of its materials in July. We didn't add any materials in August. For units started and completed, this inventory received all 100% of its materials as soon as it was started this month. Also, that this inventory was completed indicates that all of its materials were added. The total equivalent units of inventory transferred out is 18,900 pounds. Like beginning inventory, ending inventory received all of its materials as soon as it was put into production, which happened this month. So it received 100% of its materials. Total equivalent units to be assigned cost for materials is 19,800 pounds. Now we'll do conversion costs. Again, beginning inventory was 30% completed as of the start of the month. So how much conversion cost did we add this month? 70%. For units started and completed, if they were completed, then we must have added 100%. Total EU transferred out, 19,740 pounds. Ending inventory was 80% completed. Since this ending inventory was put into production this month, that 80% is how much we added. Total equivalent units to be assigned conversion costs is 20,460 pounds. This is how far in the process the previous example went. Hopefully you tried these calculations on your own and were either able to get these numbers or see your mistake if you didn't. Next, we need to calculate our cost per equivalent unit. To do so, we take our costs added during the period. It's very important that you only use the current period's costs under the FIFO method. Then divide that number by equivalent units. For materials, our costs incurred during the month was $81,180, which we'll divide by 19,800 pounds to get a cost per EU of $4.10 per pound. Our conversion costs incurred during the month were $59,334. Divide that number by 20,460 pounds, and the conversion cost per EU is $2.90. For our final step, we need to convert the equivalent units in the table in the top half of the screen into dollar amounts. We can do so by multiplying them by their respective cost per EU. However, before we do that, let's put the dollar value of beginning inventory in that bottom table. Look back at your problem information. Beginning inventory had $4,980 of materials and $990 of conversion costs. Now, as previously described, we multiply our equivalent units in the top table by the cost per EU to get the monetary amounts in the bottom table. We'll repeat this process for the conversion cost column. In the bottom table, we fill out the total column to the far right by summing each row. For instance, the total cost of beginning inventory once it was finished is $8,406. Our units started and completed cost $132,300. The total cost of units transferred out is $140,706. Ending inventory currently costs $5,778. The total cost assigned is $146,484. Note that this amount ties to the total of all of our costs from our problem. Furthermore, our respective costs for materials added to production, as well as conversion costs incurred during August, reconcile to the total of materials and conversion costs in the bottom half of the report. Note that those same amounts were used as our numerators when we calculated our cost per equivalent units. The ultimate purpose of this report is to provide the amounts for our journal entries. So let's see that application. Our first entry is to record materials put into production. Our accounts for that entry consists of a debit to work in process and a credit to raw materials or materials inventory. Where can we find the amounts of raw materials used in our report? If we look under the direct materials column, we see our materials used for inventory started and completed and our materials used for ending inventory. The sum of these two amounts is our total materials used for the period, or the amount we record in our entry. Next, let's record our direct labor put into production. The entry to record direct labor consists of a debit to work in process and a credit to wages payable. To determine our amount, we look at our conversion costs. That total amount of $59,334 includes both direct labor and overhead, and our info states that 65% of that amount is direct labor, so the amount of our entry is $38,567.10. Letter C asks for our entry to apply overhead. We apply manufacturing overhead with a debit to work in process and a credit to overhead. To get our amount, we take that $59,334 of total conversion costs, of which the remaining 35% is overhead, or $20,766.90. As for our last entry to transfer units to finished goods, we debit finished goods and credit work in process. This amount is given to us on the third row of our total column, $140,706. With our entries recorded, we can then post to our ledger account for work in process. Our beginning balance was $5,970. It will receive 3 debits for the entries in letters A, B, and C. Then we post 1 credit for inventory transferred out. Our ending balance is a debit of $5,778. Wouldn't you know it? That amount reconciles exactly to the value of ending inventory according to our cost report. Turn to page 8 to see the following information for Karaoke Carpet Company. We have our beginning inventory of $22,960 along with its direct materials and conversion cost amounts. During January, we added $742,400 worth of materials to production, along with $134,550 in direct labor and $151,611,000 in factory overhead. We need to figure out our goods finished during the month and our ending work in process. Like in the previous example, all materials are added at the beginning of the cutting process. Using the previous information, let's build a cost of production report, then use that report to record our journal entries for direct materials put into production, direct labor put into production, overhead applied to work in process, and units transferred to finished goods. Once we have our journal entries, we'll use them to update the WIP ledger account for the cutting department. Basically, let's repeat the same tasks as in the previous example. If you have your workbook, you'll note that I didn't create the template for the report on page 9. I recommend pausing this video and trying to perform these tasks from memory. Try to limit referring to the previous problem solution as much as you can. Always remember that we begin process costing by calculating our inventory to be assigned costs in whole units. Please refer to the problem information in the bottom half of the screen as we determine these amounts. The beginning inventory and ending inventory units are obvious. Next, we consider our materials added and our units finished. The total goods that we finished during the month are the goods that we transferred out. Now we can use some basic algebra to calculate units started and completed and units to be assigned costs. Note how our units started and completed plus our ending inventory equals our units put into production for the period. For step 2, we need to determine our equivalent units for direct materials and conversion costs. To do so, we multiply whole units by the percent added. Starting with direct materials, we did not add any materials to our beginning inventory this month because all materials were added to these units last month when their production began. For units started and completed this month, 100% of materials were added. The total units transferred out, 54,800. For ending inventory, these units were started this period, and all materials were added as soon as they were put into production. So 100% were added. Next, do the same thing for conversion costs. Beginning inventory was 75% complete, and conversion costs are incurred gradually throughout production, so 25% was added to these units this period. The units that were started and completed received 100% of their costs, because they were completed. Total units transferred out, 55,150. Ending inventory was 30% finished as of January 31st, so this is the percent that was added during this period. Step 3. Calculate our cost per equivalent unit. We can do so by taking our costs added during the period and dividing them by their equivalent units. For materials, we added $742,400 worth during January. Divide that number by the 58,000 total of equivalent units to get a cost per EU of $12.80. Unlike the previous problem, we don't have conversion costs given to us as a single amount, but we know that conversion costs are the combination of direct labor and overhead. So sum those two amounts together, then divide it by 56,110 equivalent units to get $5.10 per EU. Step 4. Convert these equivalent units to a dollar value by multiplying them by their respective cost per EU. Before we do that, copy over the beginning inventory direct materials and conversion costs. Our materials cost in beginning inventory was $17,710, and its conversion costs were $5,250. Now fill out the bottom table with those products as we did in the previous example. Repeat the process for conversion costs. As before, your total column will be the sum of the amounts on each respective row. So the total cost of beginning inventory is $24,745. Total cost assigned equals $1,051,521. This amount ties to the sum of all our costs and our problem information. You can also verify that the total costs incurred in the period reconcile with the sum of your direct materials and conversion cost columns. These costs are also present in your cost per EU calculations. Now for our journal entries. Letter A, record materials put into production. Debit work in process and credit materials inventory for the total direct materials cost incurred in the period. Letter B, record direct labor put into production. Debit work in process and credit wages payable. In this example, our total labor cost was given to us in our data. Letter C, record overhead applied to work in process. Debit work in process and credit manufacturing overhead. Like in the previous entry, our data gives us the specific amount of overhead incurred for the period. Letter D, record units transferred to finished goods. Debit finished goods and credit work in process. Our amount was calculated in the third row of our table. $1,005,665. Finally, posted ledger account for work in process. Our beginning balance is $22,960. Post your debits from entries A, B, and C, and the credit entry from letter D. The ending balance is $45,856, which ties to the amount calculated in our cost report. Let's look at another problem and observe the average cost method. Turn to page 10 to consider the following information for Healthy Harvest Company. Healthy Harvest Company is a bakery that makes breads. The manufacturing department is organized into 3 smaller departments: dough making, baking, and packaging. The following information is related to the dough making department. Raw materials are added evenly through the dough making process at the same rate as conversion costs are incurred. Work in process, April 1st, 100 units that are 40% completed, $49. Direct materials cost for 2,050 units started in April, $400. Direct labor cost, $80. Factory overhead applied, $220. Total production cost, $749. As for our unit data, units transferred to baking in April, 2,100 units. Units in work in process on April 30th, our ending inventory, 80% complete, 50 units. If you turn one page to the right in your workbook, you'll find a table you can complete as we work through the problem. As always, we begin each process costing problem with our formula to calculate whole units among which we will assign costs. See the bottom half of the slide for our problem information. Inventory on April 1st is 100 units. That's our beginning inventory. We have our units started, 2,050 units, units transferred, 2,100 units, and work in process on April 30th, 50 units. That last one is obviously our ending inventory. As for the 2,050 and 2,100 units, how can we use them to finish our formula? The 2,100 units transferred to baking are our inventory transferred out. Therefore, units started and completed is 2,000 units. And total units to be assigned cost is 2,150 units. The 2,000 units started in April ties to our units started and completed plus our ending inventory. Next, calculate our equivalent units by multiplying whole units by the percent complete. Remember that our problem stated that both direct materials and conversion costs are entered into production evenly throughout production and at the same rate. So we don't need to calculate their equivalent units separately. We can combine them instead. When applying the average cost method, we skip the equivalent units calculations for beginning inventory and units started and completed, and start with units transferred out. Units transferred out receive 100% of their cost. After all, if they were transferred out, they must be 100% complete. Ending inventory is 80% complete. Again, both costs are added gradually throughout production, not all at once. So only 80% of materials and conversion costs were added in April. Total units to be assigned cost, 2,140. Next, we calculate cost per equivalent unit by dividing costs accumulated through April by equivalent units. Here's our second distinction from the FIFO method. We use costs accumulated through the end of the month, not just costs incurred within the month. Our numerator in this calculation will be total production costs, including the cost of beginning inventory. Divide that by the 2,140 units to be assigned costs, and the cost per EU is 35 cents. Multiply your units transferred out by the cost per EU to get its dollar value, $735. Do the same thing for ending inventory to get its dollar value of $14. Total cost assigned equals $749. Remember, this number should match your total cost accumulated. I know this step wasn't required, but allow me to show you the journal entries. Being able to build that table is useless if you cannot correctly interpret it. The four basic entries we record are those for direct materials put into production, direct labor put into production, overhead applied to production, and work in process transferred to the next department. To get our amounts for those first three entries, we look back at our original problem. We used $400 of materials, $80 of labor, and applied $220 of overhead. For inventory transferred to finished goods, that amount was determined in our report. Finally, post to the ledger. We had a beginning balance of $49. Post the 3 debits and 1 credit from our journal entries, and our ending balance is $14, the exact amount as indicated on our cost report. Turn to page 12. I have one more problem I'd like you to try, preferably on your own. One page over, you'll find a blank sheet for doing your work. Again, I would highly recommend trying to do as much of this problem on your own without referring to your textbook, your notes, or the other problems. We're still looking at Healthy Harvest Bakery, but this time we're examining the baking department. Please ignore this error if it is still in your workbook. Work in process on April 1st, 300 units, 10% completed, $99. Direct materials cost for 2,100 units started in April, $735. Direct labor cost, $42. Factory overhead applied, $168. Total production cost, $1,044. As for our unit data, units transferred to packaging in April, 2,200 units. Units in work in process on April 30th, our ending inventory 60% complete, 200 units. First, calculate whole units to be assigned costs. Inventory on April 1st is 300 units. That's our beginning inventory. We have our units started, 2,100 units, units transferred, 2,200 units, and work in process on April 30th, 200 units. Those 200 units are our ending inventory. The 2,100 units transferred to packaging are our inventory transferred out. Subtract beginning inventory from that number to get units started and completed, 1,900 units. Total units to be assigned costs are 2,400. The 1,900 units started in April ties to our units started and completed plus our ending inventory. Next, calculate our equivalent units. Since the problem does not specify otherwise, we can presume that both direct materials and conversion costs are entered into production gradually and at the same rate. Because Healthy Harvest utilizes the average cost method, skip beginning inventory and units started and completed and start with units transferred out. Units transferred out received 100% of its costs. Ending inventory is 60% complete. Total units to be assigned costs, 2,320 units. Next, we calculate cost per equivalent unit. Costs accumulated through the end of the period, $1,044. Units to be assigned costs, 2,320 units. The cost per EU, 45 cents. Multiply your units transferred out by the cost per EU to get its dollar value, $990. Do the same thing for ending inventory to get its dollar value, $54. Total cost assigned equals $1,044. Remember that this number should match your total costs accumulated. If you were to record your journal entries, you would record direct materials put into production, direct labor put into production, overhead applied to production, and work in process transferred to packaging. We used $735 of materials, $42 of labor, and $168 of overhead. Our inventory transferred to packaging is $990. We had a beginning balance of $99 in our ledger account. Post our debits and credit, and our ending balance is $54. The very amount determined on our cost report. That concludes this video. There may be a few problems in the workbook I didn't cover. If so, you can find their solutions in the course module on Blackboard. Please let me know if you have any questions, and thank you for watching.